The US-China trade war is starting to heat up. A Chinese multinational technology company, Huawei, is on the front line. The US Chamber of Commerce has blacklisted the company, which relies on parts and software from American companies to build and market over 200 million mobile phones and networking gear that is sold globally. While there is a suspicion that this could be a short-term tactic employed by the Trump administration to gain leverage in discussions, others are speculating that the aim is to permanently disrupt the supply chain. We could be looking at decoupling between the US and China, forming two distinct global tech supply chains. Traders will be mindful of President Trump's action against ZTE, which was reversed fairly swiftly after 3 months after the company agreed to pay a substantial fine. As it stands, there's already been a 90-day reprieve granted to some broadband and wireless companies using Huawei equipment, allowing Google to continue updating existing mobile apps on Huawei phones, including Mail and Maps. However, unlike with ZTE, the geopolitical backdrop is different now, with the administration working on a broader strategy to restrict China's access to US technology. A further 5 more Chinese tech companies are expected to be added to the Commerce Department list. The upheaval is already forcing companies like Apple and Cisco Systems to reassess their considerable offshore supply chain. With the Trump administration focused on bringing jobs back to the US, it seems reasonable to suggest that this is a longer-term standoff than anything short-term in terms of tactics. While there is uncertainty in the political climate, it's often said that the future events are discounted in the price action. So let's take a look. Starting with Huawei, we can see the price trading below the longer-term moving averages, with momentum crawling along. The June 2018 gap has almost been filled and is, in all honesty, a horrible-looking chart. Next, let's have a look at Neophotonics, the largest US supplier to Huawei. The December gap has been filled and is trading below longer-term moving averages. There's been a gap in play in recent days on heavy volume, while momentum shows divergence. However, there is a possibility of a Japanese candlestick reversal formation. These are very short-term signals, but worth noting. We shall see.